Your net income for the second quarter is up 8.6%. We're at 1.3 billion euros. Still, it was another difficult quarter for market activities.
Well, in a still contrasted environment, I think we post good results. When you look at our overall global market revenues, they grow by 2% on a like-for-like basis and at constant exchange rate compared with last year. And importantly, they grow also versus the first quarter, plus 4% for the equity on a like-for-like basis and again at constant exchange rate, and plus 7% for the fixed income businesses. So all in all, as I've said, a pretty solid performance.
But still, your equities revenues are down. If we compare to some US peers or even some European peers, it sounds like it was a bit more difficult for Soc Gen this quarter.
No, again, it's better than first quarter, and we see exactly the same phenomenon. The level of activity in the US, and we see that within our own business model, is much better, more volumes, more volatility than in Europe. So depending on your exposure on the US activity, you can post different activities, different results and performances. But overall, I'm pretty happy with the performance in the second quarter.
Do you see a rebound in equities trading in the second half?
As I've said, we see relatively similar trends, something pretty dynamic in the US across the board. In Europe, something a little bit better, but still with lower volatility on the equity market, even than last year, when on the contrary, in the US, it's higher than last year. So there's a contrasted environment still.
So this contrasted environment, will it continue? What could impact it in the second half? Are you concerned by the geopolitical environment, the trade war, or do you have other concerns?
We are in a strange environment where actually the economic activity and outlook remains pretty strong. Look at the US, look at the Eurozone perspective. Even if there has been a slowdown, we tend to think that the next 12 and 18 months should remain relatively strong. And at the same time, there are elements of risks which are not so easy to calibrate. You mentioned geopolitical risk, even if at the end of the day it seems that agreements are effectively implemented. But you can think about also the Brexit, for example. So we know that there are risks, and that's why we might not also be that far from the end of the cycle in the US. So that's why we remain pretty disciplined and conservative in our risk-taking, our credit origination. And it's actually reflected in a cost of risk which is low, very low across the board. I think it reflects our discipline.
What is the number one risk for the second half then?
I think it's more, at the end of the day, probably market risk, which could be triggered by different elements, confidence issue in one country, or
so the
overvaluation of certain assets,
impacted.
Inflation. Who knows inflation? Will inflation go back, etc.? You know, there are elements which could, I think, trigger some correction of the markets. Fundamentally, that's why we remain very disciplined in our risk-taking.
In France, the French retail banking revenues are still slightly down in the second quarter, down 2%. You're expecting decline of between 1% and 2% for 2018. When can we expect a real turnaround of the French retail? Will it be early 2019, mid-2019, when perhaps we'll see some moves from the European Central Bank?
Listen, first of all, in the French retail, we see good credit volumes, good activity. We conquer new clients. It's clear. And the activity, overall, the economic activity is good. Investment by corporates remains pretty good. At the same time, we remain very low rates. No increase of rates. So what we see on one hand is still a decrease of the net interest margin, despite the good volumes on deposits and credit, and a good pickup of commission, which grow at 2.5%. We keep also a pretty selective origination of the credit because I don't want to have so much mortgage at low rates, so we are disciplined there too. Overall, we maintain a resilient profitability, more or less the same net profit than last year, something like 12% return on normative equity. And yes, progressively things will pick up with the normalization, in particular, of the monetary policy by the ECB.
So it seems like we now have a better guidance from Mario Draghi, from the ECB, about the guidance and when we could see a potential rate hike. How much of a boost will this be for your business?
But it's very positive by definition because it is an additional revenue with no cost. But may I say, beyond that element, which is important, and again, which might be fueled by the pickup of inflation and again the growth prospect, what is very fundamental also is the success in the transformation of our business model. We are investing today because we know the way people, our clients, will access banking services will change and is already changing. So there is investment in new IT, digital technology. Boursorama is conquering clients at a higher rate than expected, 1.5 million clients. We have said that they will probably meet their 2 million target 1 year in advance. And so I'm very positive in the transformation of the business model beyond probably benefiting going forward of a better rate environment.
Part of this transformation plan is divesting as much as 5% of assets. Today you're announcing that you're selling your Bulgarian and Albanian units, and you also just agreed to sell your Belgian private banking business to ABN AMRO. How much of this 5% of disposals does this represent?
Well, first of all, as we've said, we are completing the refocusing of the group on the activities where we think we have effectively the critical size to compete in the long term, as well as the level of synergies with the rest of the business to justify, of course, keeping the businesses. And as you've mentioned, we've announced 3 disposals, 2 subsidiaries in Central and Eastern Europe, and the private banking business in Belgium, while at the same time, or more or less at the same time, we also announced the acquisition of the equity market and commodity activities of Commerzbank to enhance our CIB business. That's very consistent, and what we have saying, the impact of the disposal represents 15 basis points of additional Core Tier 1. We've said that we would achieve at least half of our program this year, so what we are saying is that further announcements will be made. And this program, overall 3-year program, represents between 50 and 60 basis points of Core Tier 1.
In terms of further announcements that could be made, are we talking about South Africa? Are you in talks with ABSA? And where are the talks for the sale of the Polish unit?
No comment on any transaction. What we announce is the sale when it is effectively signed.
But this could be potentially a part of these further disposals that we're going to see before the end of this year.
No comment.
Your provisions in the second quarter are up 200 million euros. In total, you have 1.4 billion euros in provisions. You already turned the page of 2 out of your 3 litigations for Libor and Libya that you wanted to settle this year. When are we seeing the settlement for OFAC and the case on US sanctions?
First of all, when we talk about provision, let me just again highlight that the level of credit risk is very low, 14 basis points, again, that reflect the quality of the portfolio of credit, and we have a very low cost of risk across the board. In terms of litigation, effectively, we are increasing the provisioning by 200 million. What we are seeing regarding the third large potential litigation with US authorities is that there is still some uncertainty on the time frame and the financial impact, but that the settlement is possible in the coming weeks. And again, the level of provision reflects the risk as we can assess it according to the IFRS standards.
So when you're saying in the coming weeks, does that mean before the end of the summer, before the next quarter?
In the coming weeks.
But not the whole provisions will be affected to this case then?
Again, no comment. We have a general provision which includes that litigation.
When we look at Brexit, it's one of the risks you mentioned. Are you accelerating the moves in light of a potential risk, increasing risk of a hard Brexit? We're just 9 months away.
We are getting ready like any bank, knowing that for us it's again less complex because we have a strong presence on both sides of the channel with licenses, with people, with premises, with IT systems. So we can, if you wish, switch people more easily, teams more easily than if we had to select a country, find the premises, design the IT system, enter into a discussion with a regulator, a supervisor that we might not know. So if you wish, the work to be done is lighter. But yes, we are getting ready for all kind of scenarios. We will probably have more visibility at year end when effectively we'll know whether there is an agreement and hence the transition period, or effectively no transition period, and we need to be ready for something harder end of March 2019.
Would you be in favor of an extension of this deadline beyond March 2019 to avoid a hard Brexit?
I'm not in favor of something particularly, but let's say I want to avoid, by definition, more turbulence, and hence it would be better to probably have an agreement and have a smooth transition towards the new world. But that's not in my hands.
Do you believe you would relocate several hundreds, or?
We've kept the same number of people, which will be refined according to the scenario. We've said around 300 potentially, depending on the scenario.
Finally, your shares have lost still more than 10% since the beginning of the year. What is the message you want to give to investors to reassure them about the outlook of Societe Generale?
Well, first of all, let me say we are not very different from most of the European banks. There is a general kind of lack of confidence, and all banks have more or less lost between 10 and 15%. And I think we are in this period of time where people need to see a more comfort on where Europe is going, the rate environment, etc. What is important is that we are acting. We are effectively implementing with determination our strategic plan. And I think these first half results illustrates that we are acting across the board, as we've said. Growth of revenues, transformation, strong cost and risk monitoring, completion of the capital allocation, and anchoring this culture of responsibility. Beyond putting the litigation behind, deploying this global program on culture and conduct so that every business, each employee, share this culture to protect our reputation going forward and avoid the future litigation. So I think we are acting, and I must say, in the first half, which was full of activity, I'm happy and confident with the results, and we look at the future quarters to further deliver and implement our strategic plan.